Hi, I'm Josh Cadillac, and welcome to my podcast, Know Your Shit. I've been blessed to see great success, as well as seeing the bottom up close and personal in 2008. And if there's one lesson I've learned, is that if you want to have success and differentiate yourself from everyone else out there, you need to know your shit. As a successful real estate and crypto investor and an educator, it drives me insane that people do not immerse themselves in their craft. Everyone is so busy advertising and testing new sales techniques, they forget the most important thing, the product. Here I want to talk to the folks that got this right, the most successful people in the world in every industry. Bring them to you and find out what they learned in their business that made it great. When you listen to my podcast, you will know for sure that the topics and experts we have on have one thing in common. They know their shit.
Hello, everybody, and welcome to Know Your Shit podcast, where our knowledge and pride in what we do drives us to be excellent. My name is Josh Cadillac, and I'll be in the driver's seat for today's show as we learn how to stop doing deals and start closing for life. We got a great show for you today, and we have with us Corey here, who's going to tell us all about some really awesome stuff. So, Corey, thank you so much for being here, buddy.
Yeah, I'm happy to be on the show. Appreciate the invite.
We're happy to have you on here, man. So, Corey, why don't you go ahead and tell everybody what it is you do?
Yeah, so what I'm doing now is I've recently started my own coaching business, consulting business called One House at a Time, where I'm looking for investors that are looking to travel the same path that I did, where, I started with zero, properties or units or anything along those lines, and then I slowly built up my portfolio while also being active duty in the Navy, and being able to take advantage of many of the benefits that you have from being active duty member, and then using that as well as the experience that I gained to build my own personal portfolio, which then I used to jumpstart my real estate investment firm 3 years ago.
Love it. Yeah, I have a good friend. He's in the Navy. He's actually in the submarines. And I know he was like a freshman in high school, and it's very, very, very good stuff. Actually, he went to Annapolis.
Okay.
Yeah, I got a first-hand tour of Annapolis. It was pretty cool. So, what got you started doing that?
My parents actually invested a little bit in real estate when I was growing up, but I wasn't really involved with this. It didn't really leave an impression upon me when I was younger. It was just kind of like something my parents did. It wasn't until several years later, when I was a young enlisted sailor, when I had a senior enlisted advisor tell me about his real estate investment experience, how he had slowly built up his portfolio, and he was bound to be a millionaire by the time he turned 40, and that really kind of stuck with me. So as I kind of progressed through my Navy career, I went to the University of Wisconsin and graduated and got commissioned there. And I still even remember on my first ship after commissioning, one of my captains, they were asking me about, hey, where do I see myself in 5 years? And, as a young junior officer, I was like, meeting all my Navy milestones. And then I even said, and I also want to be a real estate investor. And he kind of chuckled at me. He's like, oh, you'll always have time for that. But, you don't always have time for that.
No.
And no one in the military or even like in corporate jobs are going to encourage you to find those alternative investment strategies, because they want you to stay in the company. They want you to continue to progress. They want you to be the best naval officer or corporate cog that you can be to, further the mission of the company or, the Navy in my instance. So you're not going to get that encouragement, and that's kind of what really led me to creating my program, because one of my fondest memories on deployment was sitting down with young enlisted sailors or junior officers talking about how I had built my portfolio and strategies that they could use to start real estate investing, even if they didn't have a lot of income or a lot of money set aside to do that.
Yeah, that makes sense. Well, I mean, it seems like I don't actually usually think that it's as intentional maybe as what you implied. Maybe you're right. I tend to think that the reason why they don't tell you or encourage you to do this stuff is they're not doing it themselves. They don't realize that time value of money, how important it is, because it's not. I mean, you can go get a PhD and never take a class on how money works. it's just not something that's part of mainstream education. And so for that
You
reason,
go get a PhD and not work a day in your life.
oh, absolutely, no, it's a thing. So where do you think all the success came from for you?
For me, I mean, it was really just dedication and commitment. I mean, that was kind of one of the things that I impress upon people that I work with, is that, Navy, drilled in commitment to me. That's one of the core values of the Navy: honor, courage, and commitment. And that's one of the things that you need to be committed to this. You need to dedicate time to this. And without that commitment, you're going to get at your first house, and you may only be cash flowing, say $200 right away the first month or whatever. If you may not cash flow anything for the first couple months, depending on how things work out.
Sure.
And you may be disappointed. You may be down on the whole thing. And if you don't stick with it, if you don't have that commitment, you're not going to see basically that cash flow snowball that can kick in as you work through this. And so really that's the big thing, is being committed to what you're doing, believing that this is something that will pay dividends down the road for you.
Well, I mean, I think understanding the idea that your first year in an investment is typically going to be your worst year if vacancy remains the same. Because what happens with time? Rents go up. Well, the rents go up. Does my mortgage payment change? No, your mortgage payment stays the same, but your rents go up. You take and participate in 100% of that benefit, and that appreciation is always working behind the scenes for you, giving you that extra little forced benefit. And so it's learning, and this is the thing that my agents that I teach just typically don't know. It's what I was teaching just before we jumped on here, is the idea of how to amalgamate that properly and give your customer a truly annualized rate of return, not for a cap rate for today, but over the full hold time of this investment. Where do I have to put this money someplace different for it to do better than I'm going to do in this real estate? And until an agent really has their head wrapped around the fact that they have to quantify not only the rent and the rent growth, but also the appreciation to figure out what they're asking their customer to do, they really don't have a handle on the investment of real estate, because my investor customer is going to get both benefits, right? And so that's been the thing that I see. It's that's kind of the voice in the wilderness thing that I brought to the residential side of my training is, guys, why is it only the commercial guys that are telling people about this? I have residential investors. I mean, all my business was originally residential investors. These guys that were buying 4 units or less and wanting to invest in real estate. Why don't we understand this? We're expecting them to do it on their time? I mean, this is a less sophisticated investor customer. Why wouldn't I be telling them the benefits of this and singing the praises of my product to my customer? That's just sales. It's just knowing why your thing is a good thing. If you, as an agent, don't understand why your thing is a good thing, well, you're not particularly well equipped, are you, to get people to want to buy it?
Yeah, and that's one of the things from a real estate investor perspective and dealing with real estate agents, is that being able to explain how this will obviously benefit your customer. And if you can show that to them, you'll have a repeat customer. And that's kind of, where I've seen dealing with real estate agents, whether they are just plain residential or investor real estate agents. The real estate agents, they're trying to work more off volume, it seemed like, from my perspective. They were just pushing deals to me like all the time. And it's when you've done a couple deals with them from the real estate investor perspective, that's when I really started to see the off-market stuff. Mm-hmm. And it's through that connection that I made with them that they said, hey, I don't even need to go take this to the market. I know this guy's going to come in and buy it because I know what he's looking to buy. I know where he's looking to buy. And maybe I don't necessarily know the numbers as well as he does, but I know it well enough that I know this is going to be a good deal for him. And then they just started flooding me with it. And I mean, from our side, once we can show a commitment to an agent, it makes for a really good connection. And I've done several deals with different real estate agents over the course of my real estate investing time, because we were able to make that connection. I showed that I could close on the deal, and then they started bringing me off-market properties, which I've made a ton of money on.
Absolutely. Well, I mean, at the end of the day, right, I love what you said. You talk about customers coming back, and it just doesn't seem to be a part of the industry. The industry seems to be one-night stand real estate. Love them, get your commission, and leave them, right? And, I call it Tinder real estate. You swipe, you get what you want, and you don't call them again the next day. And I'm not a fan of that because that means I have to advertise. That means I have to be on the app all the time, constantly swiping away. I want people that are committed to me, that come back to me, which means I got to give them something they don't feel like they can replace someplace else, which means kind of what I was talking about. The class I just finished was being in the mindset of the investor, understanding them, right? And so I'm thinking along lines with them, and I'm thinking about it as somebody who that's all they do. I eat, live, breathe, and sleep real estate. So I'm thinking about it at a better, higher level than the investor is. So when they come in, I can actually give them value add of things they haven't thought about as an investor. Because here's the thing, the investor, the customer, in real estate thinks they can kick over a rock and 10 real estate agents will crawl out and one is just as good as the other. I have to shift. It's not, but here's the thing. The reality of it is, amongst agents, what percentage of agents would you say are bad? I ask real estate agents that all over the country, Corey, when I teach. The number they most commonly say, 80%.
Yeah, I could see that. Typically if I got a sense that an agent wasn't able to speak intelligently on real estate investing, I would just move on.
Yep, next. Move on. And that's what you got to do. And unfortunately, right, that seems to be a real issue. And the problem, I think, really is, and you're in the industry, so maybe you tell me if you think I'm wrong. I don't necessarily know that it's intentional on the part of the agents. I just don't think they know where to even get the information to be a valuable resource because it's not what's out there. You go to I was just at a major state convention. There had to be 50 classes on advertising, social media marketing, website development, everything in the world, and almost nothing on the market that we were in. And I understand, market knowledge, product knowledge, forget that. If you're not on TikTok, that's what you need to know. And you kind of lose it there.
Yeah, it's one of those things that, so I met several agents through local real estate investing meetup groups. And so those are the agents that I felt like had a better understanding of real estate investing.
Or they're
going to the same meetings, exactly. And like I said, those are the type of people that I'm going to try to go get my business from. And if they are, like I mentioned earlier, if they're bringing me off-market properties, guess what? If I have to go sell a property, guess who I'm going to go back to?
Yeah.
And so they're getting a bite from both sides of the apple, typically.
Absolutely. No, that's the thing. You have your people, and that's just what I say I say, look, everybody wants to know a guy. You got to I got a guy. You got to use my guy, right? How do I get every customer I work with to feel like that about me as the agent? How do I get them to say, "Oh, real estate? No. You got to go see Josh. Here, let me give you his. You call Josh. He'll take care of you, right?" If my customers don't feel that way about me, I failed as a business owner. I failed as the CEO of my company because I don't want a commission. I want every commission that customer is ever going to generate. And I have to leave them with an experience that entitles me to that. I have to give them a quality of service that's going to entitle me to their business over and over and over again. If I'm not doing that, I failed as a business owner. I failed. And that's not the common message that's out there. And it's the reason why our industry is, well, frankly, as poorly perceived as it is. And I think maybe rightly so. So, what do you think makes you good at this thing, Corey?
When I graduated from University of Wisconsin, I was an engineer, so I have obviously a math background. And so, when I was learning how to evaluate deals, the math isn't overly complicated, so I was able to pick it up fairly quickly. And then just kind of seeing patterns in a market. Especially when I was starting out, when I was driving stuff locally. I don't necessarily always invest locally now, but when I was first starting out and I was driving or going through the MLS, I could spot deals that kind of met what my buying criteria was fairly quickly and determine if it was worth, evaluating. So I wasn't necessarily wasting my time going through a full evaluation of every single property.
Sure.
And so really pattern recognition, being able to evaluate a property and then get the price that kind of matched to make sure that deal worked specifically for me.
Sure, you can quickly take the temperature and know whether or not it's a potential or a no. That's really what you're looking for. Maybe, or no, and you get rid of the no's as quickly as you can, and then take and evaluate them, do a little bit more deep dive into maybes. That makes a lot of sense.
Yeah, and there's obviously some risk taking with it.
Sure.
It's, I did a lot of auction properties in the beginning, not the very beginning, but kind of as I got several deals under my belt. I took some risk with auction properties where I was able to purchase stuff for $50,000, which if it was on the MLS would have probably sold for $75, $80, maybe $100,000 in its current condition. But there is a risk to that, right? Because if you're going and buying an auction property, you don't necessarily have the opportunity to go tour that property.
Yep.
There were times where I was able to gain access to it when I probably shouldn't have, but
no comment.
no comment. But it's you kind of want to see what you're buying, and there's a risk there on auction properties that it may be in worse shape than you are, but
well,
you just price that into your offer.
I came into the market in 2008 is when I started as an agent, and so I went up representing a lot of the banks, their foreclosure properties. And so I had a tool bag in the trunk of my car, and I was blown away. I would say about 90% of the time I could easily get into a house. Like, hey, the sliding glass door, jiggle, 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 in the house, climb through a window, It's a crazy thing, but, it's the nature of what you need to do, especially in a business like that where you're talking about, you're really taking a risk because you don't necessarily know what you're getting. At least you want to put some eyes on it. So that was kind of the market where it was. What do you see as the opportunity in the market today?
Honestly, there's still some of those opportunities. Right now, actually, 2 blocks from where I live, it's on a really busy road, so it's not quite like the neighborhood that I live in when you go like 2 blocks off that road. But there's a house that's in a great school district. There's a lot of appreciation in the market that I live in, and this house is up for auction right now for the starting bid is going to be about $40,000. So I mean, that's obviously not going to be what the final bid is.
Yeah.
I had a guess. I'd say the bid's probably going to go between $80,000 and $100,000. But even still, I mean, I go put say $20,000 or $30,000 into that property, I could probably sell it for $275,000 like today.
Nice.
Or if I wait 6 months down the road, when hopefully interest rates maybe come down a little bit, you're going to see some additional. Potentially, you could see some
appreciation. Yeah.
Yep. And so, I mean, there are still some of that, those opportunities out there. Probably a lot less than when I saw, 5-7 years ago, when I was really buying a lot of properties in my local area. You just gotta, there's some risk associated with it. You gotta know where to look. You just kind of have to scour things. I mean, even on the MLS, if you see something that's been on the market for, say, like 8 months, I mean, there's a chance that they may be interested in coming down on whatever the listed price is.
Sure, desperation may have kicked in.
Maybe. I mean, like I said, a lot less today than there was a long time ago. But really, what I teach is you want to take advantage of both forced and market appreciation.
Yep.
So if you can find stuff in a great market, even if what the value is of that property is market appropriate, but it needs to be updated, there's still a good chance to make some money on that property, whether you choose to rent it out or even sell it on the back end. You just have to go and you have to add that value. And so there's a lot of different ways you can add value. One of the obviously the easiest ones, well, I say easy, but you go in and you upgrade, improve that property in some fashion, and then you bring it up to what the true market is for a finished product in that area.
Sure.
And you're either going to, demand higher rents or demand a higher after repair value, which all can create value, money, depending on how you exit that property.
Correct. That makes a ton of sense. And I mean, I think that forced appreciation is an important idea. Once you understand that the value of an income property is based upon the income it generates, that rate of return. So if you can take and bring up the net operating income of that property, if you can get the rents up some way, that stabilization process, anything that you do there is going to take and make that asset more valuable. And so you're not just taking the normal appreciation you get with time, but you're forcing it by bringing those rents up to a market rent, getting that asset to perform the way that it's supposed to. And the question always is, right, the cost to do that. It's a risk return analysis. And this is the piece, right? It's always risk return. So if I can bring up the return, I can sell it for more. If I can reduce the risk, I can also sell it for more. And so by reduce the risk, well, somebody can buy it for $270 and fix it up and sell it for $350. And I have to put $30,000 in there. Well, if I take and fix it up, I've taken all the risk and aggravation of that costs and what could go wrong fixing it. But I've taken that risk off the table, which is the reason why now I can sell it for $350, because I've been willing to take and eat that risk of what's it going to cost, cost overruns, borrowing the money, all that stuff. And so people need to understand it's a matter of figuring out what you're willing to do, what your risk appetite is, and what kind of return you're willing to take and get, and what kind of return you're willing to take and bring the market to sell. And that's one of those components that I don't think agents don't clearly recognize how directly correlated those two things are to what they're selling.
Yeah, and I mean, I reduced some of the risk because, like I said, I was more interested in having rental properties. So, I was looking more at the rental value on the back end, and so I didn't need to go put $50,000 in it. I went and put 10, 15, and I think really the most renovation I did on an auction property, I had to do up to about $30,000, which was a little bit more than I planned, but on the back end, I rented it for like $1,500, a month. Nice. And so I bought it for $75. I had to put, I think it was maybe $28,000, final price.
In there for $100,000.
Yeah, and so, I don't necessarily live and die by the 1% rule, but a lot of those properties I was getting several years ago, I would probably averaged out at about a 1.3 or 1.35% as opposed to the 1% rule. So
the 1% rule is really very low hanging fruit. I mean, you got to see what the market rate of return, what the market is going to take and accept. That's nice, but in a market like we're in right now, where cap rates have fallen as low as they have, and people are valuing these assets the way that they have. I mean, I know that residential before this, depending on your market, 7-8% rate of return for a multifamily property was very doable in a cap rate. Now, most of the places I look for bigger multifamily, if you can find 5 cap, you're ahead of the game. Just because real estate become a more valued asset in the market, because where else are you going to put your money?
Yeah, really at a 5 cap today, if you're not adding a lot of value right away, you're going to get eaten by your debt service, which is probably 7-8%.
Oh yeah, you're probably paying north of 8. Yeah, no, it's a thing, man. You're absolutely right. But I mean, here's the thing: is it still a play? I actually we just did this, and the idea that you can take and extend the buying power of your money, you could actually eat some negative cash flow in the first year or two of that investment, and still have that be a much better investment with borrowed money than it is buying it cash, just because the depreciation. If you have $300,000, it's between buying $300,000 or $900,000 worth of real estate. That extra $600,000 you're borrowing, your depreciation is now on $900,000 minus your land value.
Yeah, I mean, that's an interesting topic, because it's one of those things that if you buy in cash initially and then you wait, say, a couple months, and then presuming maybe the rates have gone down. And refinance.
Presumption. I think that they probably will. I think that the student loan repayment is going to be a major drag on the economy, which I don't know why nobody's talking about. But 43.5 million Americans have, I think it's average of $503 a month is what the average student loan payment is. 43.5 million Americans starting in October are going to have this additional expense coming out. Corey, I can't think of a historical corollary anywhere that I can remember where that largest segment of the U.S. population now has a bill overnight that they're paying that they didn't have to pay for the last 3 years.
Yeah, and I mean, you're already seeing core inflation coming down. CPI, the August CPI is going to be coming out here pretty soon, where they do anticipate to see some increase, but I mean, that's really driven by what gas and fuel and oil, all your energy stuff has really impacted that over the last month or so. And so, that's kind of an interesting thing to think about when you have your core coming down, which is really what the Fed's major concern is, because energy, there's a lot of variability in there. And And so it's going to be interesting to kind of see what they do here at the end of this month when you're seeing their primary metric, that core inflation coming down, but your overall inflation increased compared to what we saw in July, which is a fairly, hefty jump, potentially. I mean, based off of what the expectations. So it'll be interesting to see what they do. I think still people are kind of betting that they hold steady with rates, which hopefully they do.
I think there's a real outlook that we could see a really bad fourth quarter, because I don't see anybody baking the cake this additional pressure of the student loan repayment. I don't see anybody talking about it. And what's the thing that the Fed has said the entire time has been strong consumer spending has been the thing driving this whole thing. Well, now if you take and pull this money out of the economy, it's almost $22 billion a month comes out of the economy if everybody starts paying their bill.
Yeah, and I mean, obviously in the fourth quarter, you're going to start to see shelter prices impacted, right? Because shelter prices started to really slow down towards the tail end of last year, and that has been something that has been really impacting things through the summer. Is that the difference in shelter prices from last summer to this summer were still impacted, and you really started to see that slow down at the end of last year. And so that's really going to impact that, because that's one of the things they continued to kind of point out over the summer was shelter prices are really kind of holding these up. And so, you could see that as another drag on the inflation numbers. So.
Well, yeah, I think that your housing expense isn't going anywhere too quickly because there's still such scarcity in the supply side.
Yeah.
I'm a builder. I'm a general contractor, and I can tell you, every single thing that they've done, especially government-wise, has done nothing but drive up the price for me to build the exact same home. The latest thing with the air conditioning, changing the rules for the air conditioning, all air conditioners have to be SEER 2 now going forward. It's at least an extra $1,000 per house that we build in cost as a builder. I love how it doesn't matter, political side of the aisle. Out of one side of the mouth, they all scream they want affordable housing. Out of the other side of the mouth, they're doing the exact same things to take and make the exact same house more expensive and difficult to build. And so we have this huge shortfall of inventory. And usually they'd be looking at me, the builder, to come in here and bail them out some and start providing more supply. But honestly, financially, considering the risk and aggravation that's associated with building new construction, I'm not financially motivated enough. And especially with interest rates being where they are, the money I'm going to borrow to take and do this build is so expensive. I'm not financially incentivized enough to go build these single-family homes right now. And so in a lot of markets, we're not seeing builders bang them out as fast as they can, and we have a shortfall.
Yeah, and there's some very interesting dynamics working in your housing market, or just living situations in general. And I see so many people on social media talking about how we're heading for another 2008. When I hear that, it's like I don't think you know what you're talking about at all, and you shouldn't be talking on the subject. Not to say that we may not see some dramatic decrease in stuff in the future. If that's the case, I don't know what's going to drive it. What is interesting is transactions are way down. You obviously due to interest rates. No one's really moving because everyone's in their 2%, 3% home rate. You're not moving unless you absolutely have to right now. Mm-hmm. And to your point, who wants to develop in this environment? Because the cost is crazy. And really, the only transactions are associated with people that are finishing developments and then buying new homes that way. But there's such a drag on new development, which we need in this country, because we're going to be millions of shelters short here in the next 10 years. Millions.
Yeah, no, it's brutal. So I don't want to take too much of your time. I want to get this in there. What do you think are the most important things you've learned in the process of doing what you do, Corey?
Honestly, the most important thing is that you continue to learn. There's a lot of things out there that I don't know as a real estate investor. I've been doing it for, over 11 years now. And I'm always learning something new. Honestly, I feel, I'm definitely not a finance major. I'm one of the things that I've learned a lot more about over the last 18 months is basically CPI, inflation, and how that, significantly impacts the real estate market, which, generally I had an idea beforehand, but I didn't know nearly as much as I've learned over the last 12 to 18 months, as I've been, dealing with refinancing out of my properties that was in bridge debt that I needed to get into like fixed stable debt. And so that there's just always more to learn. If you think you know everything, that you don't.
Yeah, no. I mean, especially when it comes to inflation, we've all had to take and spool up on busting a history book out and seeing how real estate behaves when there's inflation. And as it turns out, real estate always does really, really well when there's inflation. But one of my favorite things to do, just on that front, is compare CPI to PPI, Consumer Price Index, Producer Price Index, because one tells you where the second one is going, and the Producer Price Index had been leading the way the whole way of being much higher than the Consumer Price Index, and then Producer Price Index fell behind it. And obviously keeping your finger on the pulse of PCE, which is that one that you were talking about, that personal consumption expenditures, which is the Fed's preferred metric. CPI is kind of the headline one because the Fed used CPI for years, and now the PCE, which always all of them tend to understate inflation, what we actually feel, but for different reasons. So it's good stuff, man. I couldn't agree more. Let me ask you this: what are you most proud of in business that you've accomplished?
Oh man, so being able to go from even just being nervous about buying a single family property to being able to grow as an investor to purchase, an apartment complex over like 100 units. Like even just probably 4 years ago, the thought of doing that was like, I don't even know how I would go about doing that. But, when you set that as a goal and you work towards it, that's something that the skills and the lessons learned as you kind of work through that are life-changing, right? It's some people never ever get there, as a operator, and that is something that I take a lot of pride in, being able to go from buying a single family to buying an apartment complex.
Love it, man. What one piece of advice would you give our listeners?
Like I said, I said it earlier, like you have to be committed, even if there's obstacles that you run into that you don't think you can get through, like you got to have that commitment to what you're doing. And if you get into an obstacle where you don't think you can get through it, there's other people out there that can help you, but don't necessarily just give up and stop and throw your arms up in the air like, well, I guess financial freedom's not for me, I guess investing in real estate's not for me, I'll just go work my job. Yeah, I'll just go work my 9 to 5 for the next 40 years because I can't make this work right now.
Love it. All right, so a little bit of a change of pace. What one book or movie would you recommend to our listeners?
There's a standard one of Rich Dad Poor Dad that's obviously was impacted me in terms of my mindset. But I've always enjoyed the Millionaire Real Estate Investor by, is it Gary Keller? I forget. Mm-hmm. I love that book, and I think he actually has one for agents as well. Just a great book. A lot more action steps in that than say, like I said, I love Rich Dad Poor Dad, and a couple of other books that he's written. They kind of get repetitive down the road, but
oh yeah.
The mindset was really good, but like I said, there's a lot more actionable items in the Millionaire Real Estate Investor that really kind of hit home with me, and it kind of like explains the idea of like, hey, you don't even need to own an apartment complex like me. You can have financial freedom with just a couple of well remodeled homes that you have good tenants in there, and that just having a couple of those houses can be life-changing for you.
Absolutely. No, it's money that's coming in that you don't have to go out there and work for. You've already worked for it, and now it's bringing it back in for you, man. When I wrote The Roadmap to the American Dream, that was the first book I wrote, and that was what it was all about. It was taking that idea and figuring out how that ties in with achieving the American dream. That financial freedom, the ability to take and make the choices for yourself. And so, yeah, man, I love it. Corey, what's next for you, man? You're a busy guy. You got a lot going on. What's the next project, the next thing you're working on?
Yeah, like I said, I really recently started my coaching and consulting business. Kind of giving back in terms of this program is something I'm very excited about. Being able to help folks that were in the same position I was in when I was started 10 years ago, 11 years ago, and especially military members. Like I said, there's some benefits out there that really helped me, and one of the stories I like to tell is how I purchased my first home that I lived in for a period of time with no money out of pocket, and there's a government first time home buyer program where actually I got paid $8,000 to close on my first home.
Nice.
And I rented that out for a long time. I sold that property, and I turned the equity from that property into $1 million worth of real estate between the 3 different properties that I purchased with it.
Nice.
So,
beautiful stuff.
Yeah.
Corey, we'll wrap it up with this. If folks want to talk to you, they want to find out more about you, where can people find you?
Yeah, I'm all over social media, so you can reach out to me on Facebook, LinkedIn, Twitter, and then if you're interested in the course that I'm putting together, you can find that information there as well.
Awesome. Corey, thank you so much for your time, bud, for coming on here and hanging out with us. And folks, that'll do it for today. Thanks for joining us and for hanging out with Corey, a gentleman that genuinely knows his shit. This is the place to find it. This is the place we talk about it. I'm going to remind you, as always, guys, stop chasing paychecks. Start closing customers for life. Start doing this business in such a way you can be proud of the business that you do. Till next time, guys.